This is Contractor Sense with Ruth King.
Welcome to Contractor Sense. Here you discover ideas, tactics, news, and information that matters to your contracting business and you. I'm your host, Ruth King. This episode is sponsored by Financially Fit Business. Get the business tool that makes your financial statements come alive and turn data into impactful graphs that help you see what is going on with the health of your business. Go to www.financiallyfit.business and get started today. Thank you for joining us. Here is how we will help your business and you. Death by 1,000 cuts is how the ancient Chinese tortured people. No one single cut killed them. However, it was the accumulation of 1,000 cuts that eventually killed the person. So what does this have to do with your business? It's the little things that you don't pay attention to that could add up and kill the business. No one of these things by themselves will kill your business. Do enough of them, and you could experience a slow, painful death. Over the next few weeks, next few podcasts, I'll be discussing these little things that can add up to big losses and potentially put your company out of business. Is it a downer right before the holiday season? Maybe. Think about these things and don't do them. 1,000 little savings can have a huge impact on your bottom line. The first cut, running your business on cash and ignoring cash trends. You probably fall into one of two categories. Category 1, you run your business by looking at your checking book and haven't a clue whether your business is truly profitable. Or Category 2, you look at an accrual-based financial statement and know if your business is profitable. Here's a hint for Category 2 contractors. You still have to monitor your cash trends. So let's begin with Category 1. So if you run your business on cash, you haven't a clue whether you're profitable. The last thing you want to do is to send your books to your accountant and he calls on April 14th saying, you owe $20,000. You don't have it. And you were shocked that you were that profitable. Where is it? Well, cash and profits are two totally different things. Cash is a balance sheet item and profit is a P&L item. All that a profit and loss statement tells you is revenues were higher than expenses, so you had a profit, or expenses were higher than revenues, so you had a loss. On a cash basis, and you're only looking at your checking account, you have what I call financial statement fruit salad. Now, what is financial statement fruit salad? Well, think about it this way. On a cash basis, you get revenue when you physically get the check or you get the ACH payment or a credit card payment for whatever work you're doing. And you have an expense when you actually write the check for the expense, send the ACH payment, or pay it by credit card. So let's assume that you have apples in January. You got revenue in the door, right? The expenses to pay for that revenue, probably not in January. Let's say they're in February. So if January is an apples month and February is a peaches month, when you job cost, you have apples and peaches and you have what I call fruit salad. So on a cash basis, you almost never have consistency between getting money in the door and paying your bills for those jobs that you got money in the door for. On an accrual basis, you always do. So on an accrual basis, it's very unlikely, unless your bookkeeper is not accounting for things properly, that you do have financial statement fruit salad. Okay. So if you're running your business on a cash basis, you will rarely know that you're profitable or not. It will tell you have cash in the bank. And that's about where it is. Okay. Profits are not cash. All right. So from Category 2, for those of you who don't operate your business on a cash and actually know whether your company is profitable, I often hear this. Well, I look at the money in my operations account every day, and you should. Terrific. I'm glad that you are doing it. But the reality of the things that you're seeing on a cash basis, it's very hard to remember, okay, who did we pay that ACH payment to? Or was it due or not due? Or did we pay 2 months worth of this? Da, da, da. And yes, cash is coming in, and yes, cash is going out. but it's not whether it's profitable cash or not. And let me tell you this story. So two contractors started a business together, and they grew it from zero revenue to $2 million in revenue in about 12 years. Now, this is when $2 million was worth a lot of money. So it was like 1990s, okay? And they never, ever looked at a P&L and a balance sheet. The only thing they looked at was cash. So they were growing and they were growing and they were growing and they're growing, and they had the cash and they could take their discounts on their vendor bills, and they always had money to pay payroll and basically do what they wanted to do. And they hit about $2 million and growth absolutely stopped. And so they were $2 million, and within a few weeks, month or so, they had some problems because they couldn't take their vendor discounts because they didn't have the cash to do that and pay payroll. And they saw this going on for a couple of months, and they looked at each other and said, wait a minute, we're a $2 million business. We've never had any of these problems. Something's not right here. Well, they were smart enough to make a phone call, obviously to me. And to make a very, very long story short, they were losing a nickel for every dollar they took in the door for 12 years. And you say, well, how does that happen? Pretty easily. Number one, don't track your materials. Number two, don't track your labor. Labor's taking longer than it should have. Materials are walking out the door. I mean, it's very easy to lose a nickel. And you will never see it as a company is growing, because as you're growing, the dollars that were spent, that were generated from the previous job go to fund the next one, and that one finishes, and the next one comes, and the next one comes, and the next one comes, and the next one comes. And it's very growth oriented. The revenue line is a line increasing. But once revenue stays flat, like it did at 2 million, then you're going to see 5% less cash every single week. And after a while, that starts adding up, and you're going to be scrounging around to pay payroll and doing those types of things. So if you only want to operate your business on a cash basis, you will never, ever know whether you're truly profitable. You have to be on an accrual basis to know true profitability. And, for some of you, you may not care. You just want to make sure you got money in your checking account. I've also seen it at the end of really busy seasons when there's tons of money, and then it's all gone when you have to pay all the vendors for all the work that you did for the busy season. Death by 1,000 cut, just not being on an accrual basis. After the break, we're going to talk a little bit about cash trends and cash flow trends. Thanks for listening to Contractor Sense. I'll be right back.
Here's my holiday gift for you. Try Financially Fit Business. Put 2 years of your monthly financial statements in the software and see what they're telling you. We'll take you through the process and review your financial graphs with you on a Zoom call. Make sure that your company is financially healthy starting the new year. Your investment, only $299. Call me at 770-729-0258 or Ruth King at hvacchannel.tv. I'll send you the simple list of what you need to send me. If you are using QuickBooks Online as your accounting software, you don't have to send me anything. This is an $800 value for only $299. You save $500. Hurry, this offer expires January 15th, 2026. It might be the best investment you make all year.
I'm back. Thanks for listening to Contractor Sense. So let's start talking about cash and cash trends. Yes, cash is king and queen and everything along those lines, but you have to have profitable sales, which turns into positive cash flow, which turns into your cash. The story that I told before the break, they didn't have profitable sales. They had more cash flow because the business was growing. And when the business stopped growing, they saw that I saw that it wasn't profitable, and we fixed it, obviously. All right. So let's go to those of you who are in category 2 and actually, know whether you're profitable or not, and you're operating on an accrual based financial statement. Okay. Yes, you still have to monitor your cash, and you should be doing that to spot the irregularities in your operating account. However, as we learned before a break, looking at cash in the bank doesn't always give you the overall trends of your business as they relate to cash. Think about it. You get money in every day and you write checks every day, maybe, or you send ACH payments every day or at least every week. Is the cash flow trending in a positive manner? And this is almost impossible to see when you look at your bank accounts online every day. So what you want to do is look at the major cash trends. And these are what are known as working capital and the current ratio. And I'll explain both. And both of these trends are calculated from your balance sheet. No, they're not calculated from your P&L. They're calculated from your balance sheet. So first, let me make a few definitions for you, or define a few things for you. Current assets first. They're assets that are cash or turned into cash within a year. Generally, it is cash, obviously, accounts receivable, inventory, and what's known as prepaid expenses. For those of you doing construction, you're going to have things related to job performance, but we're not going to cover all that here over and under buildings. But let's worry only about the three major ones: cash, accounts receivable, inventory, and then prepaid expenses if you have them. Current liabilities are things that have to be paid within a year, and they're generally accounts payable, taxes payable, the deferred income on deposits, and the deferred income for your maintenance agreements. So current ratio is just current assets divided by current liabilities. Okay. Working capital is current assets minus current liabilities, right? So it's a negative. Assets minus liabilities, or assets divided by liabilities. So the thing that you want to figure out is, what do your company's current ratio and working capital trends look like? Think about what those numbers should look like. They should be going up in a positive direction, or some of you maybe have your working capital being very flat or your current ratio being very flat. But it should not be going down, and it should definitely not be less than one from a current ratio perspective, i.e. current ratio or current assets divided by current liabilities, because that means that you have more liabilities than you have assets to cover those liabilities, which is a really hard and cash flow problem oriented thing. And from a working capital perspective, it should never hit zero, because then you've got current assets equaling current liabilities. And if it gets negative, you've got more liabilities than you have current assets. Okay. So the trends are really, really what's important, more so than the actual numbers themselves, because even if your trend was heading positive for, a few months, and then what happens is you stop paying attention to it because you think they're all going the right way. And you look at it 6 months later and the trends are going the wrong way, time out. You should have looked at it on a monthly basis to make sure the trends continue to go the right way. So what do you do if the trends aren't going the right way? Generally, it is one of three things. It's a profitability issue, i.e., you're not as profitable as you were in the past. That means generally that your vendors may have increased their prices and you didn't increase yours to your customers. Or it might be something like a productivity issue where you bid a job for 8 hours and it takes 20, which causes negativity, and you have enough of those things. Or you might have a lot of warranty issues which cause it. And you might be increasing overhead to pay for training, or because you bought a new building, or you're adding a management layer or something along those lines. If you know why you are becoming less profitable, that will tell you why these trends are not heading in any upward manner. If you don't know why they're not heading and they're starting to head in a downward manner, it's generally one of those things. So figure out what it is. There is a fourth, but it doesn't happen very often. It's a new competitor coming into the area, and they lower the prices so much that you stop getting work. They're stealing all of your customers because your customers don't want to pay as much and don't necessarily understand the value. And then as a result of that, you have no revenue, you still have to pay the expenses to keep your people and things like that. It doesn't happen as often as we think it does, but it does happen occasionally. So just, once in a while, that might be the reason, but it's generally you haven't raised your prices when your costs have gone up. Your people are less productive than they were in the past. If you've, had people who retired or, moved out of state and they are being replaced by less seasoned, competent, experienced, whatever terminology you want to use, people, it'll take longer than the guys who were really, really experienced. So just be careful from that perspective. Okay. If you want to actually see how this works, you can find out in less than 5 minutes with Financially Fit Business, and just go to financiallyfit.business and click to subscribe, and you can subscribe and just see where it is. Or you can subscribe and put it in every month. It's totally up to you. All right. So I think we talked about not operating your business only by looking at your checking account. But still, if you're operating your business on an accrual basis and know whether you're profitable or not, you still have to look at your checking account. But then you're also going to track your current ratio and your working capital to make sure that your cash flow and your cash trends are heading in the right direction. Thank you for joining us. Choose one thing you discovered and implement it in your business. These ideas, tactics, and strategies help you make more money, have more free time, and give back. If you like today's program, spread the word. Please review this podcast on any device you're listening to it on. Help a fellow contractor make more money too. For comments or questions, call me at 770-729-0258 or email ruthking@hvacchannel.tv. Thanks for listening. Have a great and profitable day.